As we continue on this journey of trying to retire early off of passive income, the Dow, Nasdaq, and S&P are all down again today. But to be fair, at least in my account, seems to be doing okay. I don't know about you guys. So make a comment in the comment section. Let me know. Are you seeing the same thing? Like today, at least in my trading account, it seems to be doing all right. My set it and forget it account, I decided to look since I'm doing the video, and it's down a little bit. And I'm going to tell you about something I actually bought today in the set it and forget it account because it's something that I talk about a lot on the videos. Think you guys might all be interested. For those of you who don't know me, my name is Adam Kahn, and this is Investing with Adam K. So, as we continue in this journey for retiring early on an attempt to have passive income paying our bills, we have another day where the Dow, the S&P, and the Nasdaq are all down. At the same time, I don't know if you're noticing the same thing as me, but I don't see the account down so much, despite that the indices are down a good bit. Now, Walmart might be what's impacting that a whole bunch because they came out with rough earnings and seem to be down a little bit. But I'll take a look. I bought something in my set it and forget it account, so I'm going to talk about that and let you guys know where I stand on it so nobody's surprised about any changes I've been making on some of the stocks that I've been talking about. So, hello, my YouTube friends. Today is Thursday. I forget the date, but I think it's August 21st or 20. I think it's the 22nd because if I remember correctly, options expiration is the 23rd, which is Friday. Anyway, just so we can get that off my chest. So, how's everybody doing? Hopefully, really well. Hopefully, your accounts are surviving the rough week this week. But hopefully you don't really pay a whole lot of attention or watch it that closely. Now, I do the videos. I'm also neurotic, so I can't help but watch, but I'm really not making any changes except for one. Well, that's not fair. Two. I bought two things in my set it and forget it account. One is a new position on a stock that I've been talking about in videos for a bit, and another one is I added on to something that I've done a lot of videos on. And I'm going to tell you that not at the end. I'm going to tell you right now. I actually added on to Target. You know, they came out with earnings yesterday. The earnings weren't so bad, and the stock got beat up pretty good. It rallied most of the day, and then today it's down a tiny bit. And I thought, good opportunity to add on. And why did I add on? Well, if the rhetoric on CNBC is correct, the reason the stock sold off so much is they made the transition with the CEO, but they pretty much just put their chief operating officer in that position. So second in command just moved up. And if they're correct, what they were saying is everybody hated that because they were hoping that they brought new blood in to be able to make some changes and drive things in a different direction. While that might be true, the reality is what I love about Target is the numbers. I don't love the company. Like, I don't want to mix those two things up. Like, they're things that I think they do really poorly and I wish they could improve on. I don't shop at Target too often, which might be an indication that don't do such a great job because if they did, I go to the places I really enjoy. But to be fair, I do enjoy going there more than Walmart. And when they became quote unquote Target, which is what they kind of had that stigma for a while, is my memory was it was a nicer shopping experience for approximately the same prices as what you could get at Walmart, but the stores were a little bit cleaner, it had a nicer look, the employees were a little bit more polite. They didn't carry quite all the same things or as much, but you could find it online too. They then made some changes and started raising the prices a bit, which is okay. It wasn't too much. But when they added the grocery section, I feel like they did a terrible job with it. You know, at least in Walmart, it's a full grocery. You can go there, get your shopping done, do your other stuff if that's where you go, and it matches their store. What Target's kind of done is they've put in these little boutique supermarkets. I don't even want to call it a supermarket. It's more like a little bit bigger than a convenience store. And the problem is, from what I see, is they sell lousy products, but they're rather expensive. It's like the worst of everything. The if you're stuck and you need some chicken, like sure you might pick it up there, but when I've looked, they're pretty expensive for what they sell. Same with the fruits and everything else. So if you want to compete with Whole Foods. Like, do a better job. Have organic this or like Trader Joe's or some of the others. But to sell the same thing or lesser quality than what I can get for Vegas at Smith's and Albertsons, but what I can find at Smith's and Albertsons with 1/10 of the variety at a significantly higher price than them isn't anything that's going to attract me into the store. So the only sales I'm guessing they're making are from the customers already coming in for other things that forgot something. Now, every now and then we'll pick up a bag of chips or something from there. But really, my original comment's true. I mean, we probably go to Target 6 or 8 times a year. I'll shop online at Target. I think they have a good experience there and the pickup is good. But going in and spending time and looking around, we just don't do it that often and we used to. So I think they've done this in a lot of the sections. Like it's kind of half assed. It's not like they've done a really good job at adding furniture. Sometimes they got a couple of things in there, or the section where they're selling home goods, or sometimes they're selling vacuums and stuff. But they have a small selection. The price isn't so great. But again, it's a good shopping environment, better than Walmart. And I think they got to kind of pick a direction and go with it. And the reason CNBC was saying they don't love the idea of somebody that's second in command being the new CEO is they don't see anything changing in terms of the direction of the company. And I could understand that concern, but the numbers are still great. Like they make a ton of money. They're paying close to a 5% dividend using, if I remember correctly, I might be off, but if I am, it's a tiny bit, less than 50% of their free cash flow to pay a 5% dividend. So even if the new CEO doesn't want to do a whole lot, if he wants to drive the stock price higher, all he has to do is raise the dividend a good amount, and I think you'll see the stock price go higher simply because the yield becomes so attractive and it's a secure dividend. If I took three companies, Costco, Walmart, and Target, and wanted to own those three companies, the order of what I like best to what I like least is probably actually what I just said now. I like Costco the best, I like Walmart second best, and then Target in terms of being an owner in those companies and which one I think is better companies. But now, if I add valuation into the equation, Target is by far number one with a distant Costco behind it, and way behind Costco would be Walmart because I can't understand why Target with a 11-ish PE ratio using less than 50% of their free cash flow to pay a 5% dividend is valued where it is versus Walmart that's not growing that quickly either and didn't have great earnings, trading at over a 40 PE ratio, I think 44, and I'm guessing it's even worse with its current earnings report, using a 30, 35, or 37% of their free cash flow to be able to pay a less than 1% dividend. Like, nothing about that sounds attractive to me. And if I ran a hedge fund, I'd want to buy dollar for dollar against selling dollar for dollar. I'd be buying Target and shorting Walmart. Now, as always, that is not financial advice. I don't want anybody doing any of that. As always, you need to do your own research. Reach out to your financial advisor, your lawyer, your accountant, whoever you use for making your financial decisions. And don't listen to me because, as I've said, I am an idiot. I am a huge idiot. I don't think you should be listening to anybody on YouTube for that matter, but by all means, definitely not me. But I did buy some more Target today. I added on to the position. I'll be happy to take that dividend. I hope that the CEO does a decent job and is able to start driving earnings a little bit better. Sometimes just having a transition takes a little while to get through, but it gives a quarter or two that maybe things work out and maybe in time it'll do better. And in the meantime, I get a 5% dividend, which I'm totally happy to get. So the other position that I added on to the set it and forget it account is Conagra. Talk about a boring company that I really don't expect to do. Let me fix this a little. Sorry, I've been swimming in the pool today. A little embarrassed by how I look when I do these videos. But talk about a boring company that I really don't think anything will happen with, and I don't see these great prospects in the future. And I just see it as not the greatest investment in some respects. But I know I've mentioned as I've been getting older, I've been rotating out of, some of the growth into things that are a little, what I would say is less risky. Not that it's really less risky if you look at the chart, but it's finally fallen to a level that just looks attractive to me. And what I find with companies like Conagra is they may trend for 5 or 10 years in a direction, and when they catch themselves, if they're going down at that time and start to bottom out and reverse, same thing, and they don't go very fast, but once they start going higher, they might go that direction for many years. And right now, it's paying over a 7% dividend. And the dividend seems secure. There are some concerns with Conagra. They had some expenses, they had some things going on. So maybe they run into a position where they have to cut the dividend. But I used to own a restaurant, and a lot of the things you buy are from Conagra, whether you realize it or not. And I just think they're pretty enmeshed in their space and they're doing just fine. And I think that will continue. And from my perspective, as long as they're able to pay that dividend, I'm not super sensitive where the stock goes from here. I'd be much more sensitive about not owning some tech company that I owned or something like that, or getting out of some of the OKLO, which eventually I will, and not have the big ups and downs that they have, and rotate into big and boring because I'd rather rely on the dividend, which can be cut at any time. So I don't want to rely on it completely. But if I can get a 7% yield on something, that's phenomenal return. Now, I touched a little bit about, position size in another video, which is very important because anything paying a 7% plus dividend does have a risk that maybe I'm not seeing. Now, sometimes you jump right in and it ends up great, and you don't realize that they were having all sorts of problems. That's why the dividend was getting so high. Things end up doing just fine, and you never notice and think you get the steal of a century. But you have to take into account that maybe that's not the case, and you run into a situation where a company has to cut the dividend. That is a possibility that I try to keep in my mind when getting into Conagra. So I'm not going hog wild and putting a huge percentage of the portfolio in. I put in less than 1% again. I'm beginning to kind of, I was a little bit hyper focused on less tickers that I saw growth with. And as I'm slowly rotating out and getting into the stuff that I see as dividends, I'm putting on smaller positions to be a little bit more spread out, to have less risks so that companies should do well. Now, I think I touched on this a little bit in another video where my buddy was talking about Warren Buffett. And I started to explain that, when they say that Apple is 20 some odd percent of his portfolio, you have to keep in mind that's only 25% of his portfolio, that Apple is 20 some odd percent. Little confusing. But here's what I mean. So 75% of Berkshire Hathaway is in companies they own, like Aflac and Dairy Queen and Berkshire Hathaway Real Estate, and the companies that are just under their umbrella as Berkshire Hathaway. The investments that they have in other companies that are in the stock market is only 25% of the portfolio. So when they say a stock that is still a traded stock on the exchange is a certain percentage of the portfolio, it is only out of that 25% that is invested in equities. So he was talking about it saying, geez, I didn't even realize that they only invest 25% of their money in the equities. So, maybe I should start looking at being more diversified. And I said, well, really, they're 100% invested. Now, I know, before you start roasting me in the comment section, which feel free to, because I like comments, so I don't mind, the they do have a lot of cash on the sidelines. I'm including that as invested, but it's invested differently. I think all money is invested, whether it's literally in your checking account, whether it's in a high yield saving, or it's in equities, or it's in a car that's depreciating. I see things that way, and I know not everybody does. Either way, I know a lot of their money is in cash right now, so I'm not really, I get it. But that being said, when they look at a company, they're looking at their earnings. They're seeing how much money they make. And I'll bring it back to my friend. We talked about COVID, and he talked about, if you put all your money in the stock market and the prices go down, you're worth less money, and everything's terrible and whatever else. Now, this was happening when the stock market was dropping yesterday, so I'm sure there was some nervousness there. And he used to own 4 or 5 mechanic shops in Las Vegas. And I said to him, I go, well, during COVID, your shops became worth less money to somebody buying it. And he's like, "What are you talking about? We actually were doing just fine and the revenues were coming in and." I said, "That's the point. And that's what Warren Buffett looks for. He looks for companies that are doing just fine in a distressed period where he's comfortable that their earnings are okay and they're doing all right, but things are distressed and people are selling it so that there becomes a delineation between the valuation in the stock market versus what the earnings are in a company. And your mechanic shop may have been something he would have bought at the time of COVID because the value of your company would have likely dropped along with everything else, despite that the earnings were coming in just fine. I said, now you being smart would have never sold it because you knew you were doing just fine. But there are scenarios where people want to get out of a company either way, and when you put it into the stock market, there are lots of owners, everyone who owns stock, that might be selling and making a stock discounted. Sometimes those companies are small enough that there's no point in Warren Buffett and his team at Berkshire Hathaway taking a stake in that company. They may as well just buy it because it's become a good value and now it becomes part of their umbrella. So don't get too stressed about where the price of a stock is. If you do your research and pay attention to the earnings and the growth and how a company is doing, the ups and downs of the stock market create opportunities. They shouldn't be things that you get emotional about and get worried when a stock goes lower or when it goes higher. If it gets too low, that becomes a buying opportunity. I'm hoping I'm correct with that with Target and with Conagra, that they've just gotten a little too low and things aren't that bad. Now, I don't have the connections that Buffett does. I can't reach out to the CEO. I'm not able to check their buying sheets with the whoever they're buying their products from and see their sales the same way. I have to trust the information that they're putting out there publicly for all of us, which means my guess is no better than anybody else. But I'd like to think that they have access to some information that makes them better at guessing. But it goes to the point of don't let the ups and downs stress you too much. That creates the opportunities. And same to the upside. If a company's earnings is not growing at the pace it used to, but the stock goes up in value to where the PE ratios just get expanded, well, maybe that's time to lighten up a position or consider getting out if you just think it's gone too far or if your general premise about the company has changed. Outside of that, pick great companies and stick with them. You know, I'd like to focus on dividend account stocks. The problem with sticking with dividend stocks is I do end up buying companies like Conagra that I don't think are Amazon or Google. I think there's nothing wrong with Conagra. And if my real goal is to own the best companies, I'm not so sure it fits in that. I'm trying to adjust my goals because of my age and what I want with my life. But it's hard for me mentally when I think you should just own the best companies. Now, I'll also touch on United Health again. I still think they are the best deal out there. I have my position on. I'm half hoping it goes back down, but I don't really think it's going to happen. I was probably one of the few people out there that was kind of bummed that it came out that Berkshire Hathaway had bought some because I don't like that that drove the stock price up because I was hoping to pick up more and more as it got cheaper and cheaper. It does give me some comfort to my point about his connections and his ability. I'm guessing that they talked with the CEO and the board members. I'm guessing they have relationships with people at the Department of Justice to dig into what's going on and how bad it may become. Now, they're not going to have the answers. It's not like they know things and they're not going to have information that's private information, but they're going to have better information than I will. So even though I don't have quite the position that I want to have on, I'm glad to have the comfort to know that somebody who has those types of connections also sees the value that I was hoping that was in United Health. Also, as I've said in a few videos, when I started to say don't listen to anybody on YouTube, my God, I heard that, I'm getting the pop ups because I watched her videos of this girl who is promising 80 or 100% returns annually. And she keeps on flip flopping about what she does and how she trades. Now, she talks about buying her course because you can learn how to make those types of returns and you barely have to trade. Maybe you're putting trades in once every couple of weeks and it works itself out. Yet meanwhile, she's posting shorts about her daily trades and the time of day she tries to place her trades. And it started with I do this, and then yesterday it was, when the markets start pulling back, I tend to wait it out to see what happens. And then today she kind of said, well, sometimes I do, but if I do, I wait until after the power hour and I don't start until 11 o'clock in the afternoon when things kind of slow down. Okay, well, if you're making 80 or 100% returns, I'm guessing you are more active when stocks are having pullbacks or when they're screaming higher. The opportunities do come on the big down days, and maybe they're wrong and they continue and it goes against you. But if you really think you're going to get 80 or 100% returns, you better be buying on those big down days, and you better be digging in deeper on the really big down days. So that's why I challenge this strategy and if the returns are really legitimate. Or perhaps she had NVIDIA or some other high flyers that did really well. And yes, while she got those returns, that doesn't mean it's a strategy to be able to teach people. Anyway, I don't mean to harp on her. It's really just an example of a lot of the ones on YouTube. Now, there are also some great people out there on YouTube. I feel a little like Madonna making a quick change. Forgive me and the jumping around, but the phone overheated and it stopped in the middle of recording. But what I was saying is there are a lot of people on YouTube who I really do love as well. Like I love Joseph Carlson. I think he does great research, very well thought out, super patient. I've actually followed a couple of his trades. I recently put on a Duolingo position because I liked what he talked about on it. I'd go check it out. I love Russ from Dapper Dividends and Ryan Williams, I think his last name, Ryan Ryne, not Ryan like some, but more like Ryan Sandberg from the Cubs. I might be a little old. You guys may not know him. And I also I love Ari Gutman. I mean, these guys are great and they give good advice. And there's a new one. I gotta look up his name. He does some great videos, good advice. There's a new one I found too, and even the guy from Everything Money, Paul. I like Paul. Like he gets reamed in the comment section. His picks. Like I get it, but I also think like his analysis thing is kind of silly because trying to make up what you think earnings and how things are going to grow in the future is a really like predicting the future is near impossible. But I like his concept of buying things when the valuation is good. It goes along my concept of bad news, good company, because he always says the news follows the stock or the stock price follows the news. When the news is bad is when the stock prices are depressed and people sit there following the news going, that company sucks, it's terrible. But you know what? With time, things change and companies go through these periods of being out of favor and in favor. When they're in favor and they're popular, they're overpriced. That can last a really long time and it can be a phenomenal trade, but they are overpriced and vice versa. Things when they're out of favor can be undervalued and super good deals, and that can last a really long time too. I'm more comfortable waiting for things to be out of favor. Like it was super comfortable for me to buy Nike, even if it went lower. I just wasn't super concerned that in 5 years or 10 years that Nike's going to be out of business. And I know that I'm not overpaying because everybody hated it. Like when everybody hates something, you're getting a bargain. There's that saying of Wall Street's the only place that when things go on sale, everybody runs for the doors. It's kind of true. Things get discounted, the news is bad, and everybody runs away because they don't want to buy it. And then when it's super expensive and it's not on sale, everybody runs in and wants to buy it. So I think these guys give great content. I think they do good videos. Some of the ones that I think are the worst have some of the most entertaining channels. Just be really careful about who you're listening to and what you're paying attention to, because I think we all have the same goal of trying to accumulate money and save for the future so we can have the passive income and retire. I mean, or at least be comfortable that we have a good amount of money there. So I don't know. Make in the comments. Let me know what you guys think. Do you like some of these guys? Who's your favorite YouTuber? Maybe I'll check them out. I mean, oh my God, how could I not even, man, dividend compounders with cheese. Amos, if you're watching, I'm so sorry. He is one of my favorites. He does good analysis. He's funny. I like his little jokes. He talks about his nipples getting hard and, something about his PP or something. It's just funny. Um, I don't know if you guys find that type of stuff funny, but I do. Anyway, do me a favor if you haven't already. Hit that subscribe button, smash the like button, make comments in the comment section. Have you been buying anything? Have you just been sitting and watching? Are you doing anything in your portfolios? Are there guys on YouTube you like, or are there ones you hate? Like, I don't know. If you hate me, go ahead, put it in the comment section. I'm good with it. I'll be happy to agree or disagree. Anyway, have a great day. I don't know that I'll be able to do a video tomorrow. Oh, I'm going to post. Oh, geez, I should have said it earlier. I hate waiting till the end. But if anybody sees it, by all means, make a comment. I'm going to put up a couple pictures. I'm making a brisket, and I'm also making some beef ribs. The beef ribs I took a picture of when I first took them out, and then I've wrapped them and put them back in the smoker. And the brisket, man, that I did 16 hours on low heat. It looks phenomenal. Now I've let it sit about an hour and change, and it's time to cut it and prepare it because my uncle from China is coming to town. And when I tell you they were beyond nice to my wife and I and my father-in-law when we were visiting China, I really want to be return the not favor, but just the kindness. Even I don't drink, but he got me this liquor, or he likes this liquor, Mutai, when we were in China that we drank a lot of. I probably drink 2, 3 times a year, and I drank twice with him. So I went and picked up some of the Mutai as well to say thank you to him, which is not, totally out of the ordinary because I'm not kidding. I almost never drink. I'll go years without having a drink. But he likes to, and he's coming to visit, and it's time to say thank you. Anyway, again, hit that subscribe button, smash the like button, make some comments. Let me know what you think of the pictures of the brisket and the ribs, because I got a smoker and I love to cook. I think it's the best barbecue in town. Have a good day.